Hello and Assalamualaikum. With my name is Mike Mala and today I'm here with another AI session and today our topic and today my topic is about why is the religious management ignorant despite being the most important show in reading. So we will hear with our challenge and our questions. Hi ChatGPT, how are you and how are you doing?
I'm doing really well, thanks for asking. I'm feeling pretty sharp today. How about you? How's your day going so far?
So far my day is good and so today our topic is about why is risk management ignorant despite being the most important tool in trading.
That's a really powerful topic. There's a lot of layers there. Like, even though traders know risk management is crucial, it's often hard to implement consistently. I think you could explore things like overconfidence, loss aversion, or just the adrenaline of trading that pushes people to skip it. What angle were you thinking of taking?
Hmm. So why do traders think that this trade will win-win?
That's a great point to unpack. I think a big part of it is that traders often rely on intuition or a recent lucky streak. They believe, I see a pattern, I can beat the odds this time, even when stats say otherwise. There's a sort of illusion of control, like if they just tweak their strategy, they can bypass risk. I think showing how often this backfires could be really impactful in your piece.
Okay, so is ego stronger than knowledge in trading?
Exactly. There's this weird dynamic where confidence can drown out rational knowledge. People might know the rules, like risk to reward ratios, stop losses, etc. But when that belief kicks in, especially after a few wins, they start thinking they can outsmart the market. That's where the risk really explodes, right? So you could contrast that overconfidence with the cold hard math behind risk management.
Okay, so why do they think that they are smarter than the market?
Yeah, that's such a human thing, isn't it? I mean, once we get a few small wins, we start to believe we've figured out a formula or that we have some special insight others don't. And that's when risk gets ignored because it feels like it's not going to happen to us. So I think really hitting that psychological angle about how perception distorts reality could be super powerful in your piece.
So that a small wins are good, but when small wins, when engaged to the person which is traded or doing something, he got overconfidence and he just will give it all inside him that what he got in that thing.
Yeah, exactly. And that's where the real danger kicks in because that small win feeds this narrative that I know better or I can control this. So suddenly they go all in, bigger stakes, bigger risks, and that's often when they wipe out their account. It's like a psychological trap. So tying that emotional rush to the math of ruin could really hit home for your audience.
I had traders protecting profit or protecting ego.
Oh, that's such a great way to frame it. Yeah, at the heart of it, a lot of this is about ego. People want to prove to themselves and others that they can beat the system. So sometimes protecting that sense of being in control trumps the actual goal of sustainable profit. You could really dig into that tension, ego versus long term success, so the audience sees what's at stake.
So why does greed override this risk use?
Yeah, that's a really deep question. I think greed is so potent because it's tied to instant gratification. It promises a shortcut, get rich quickly, skip the grind. And that emotional rush can short circuit logic. So even when a trader knows they should protect their capital, greed whispers, this time I'll be different. I think showing how that short circuit temptation undermines long term stability is really key.
So, traders prefer big wins over constant gain.
That's exactly it. Once that greed takes hold, it hijacks patience and discipline. Those are the muscles you need for consistent success. But greed says, why wait? Take the big win now. And that's why risk management slips away, because the longer term perspective is overshadowed by the hunger for fast, big returns. So, grounding the piece in that tension between patience and greed could really drive the message home.
So, why did they do this for like? Why did
Yeah.
they prefer more win? Why? Because constant gain is more gifted than because you see when constant gain is good for us. Like if you got in 1 month, if you got around $100, and every day you are trading, but you are not risking your whole thing. $100 you get every day. If you are constantly slowly gaining your thing, and you can ground to in 1 month you can, if you are discipline, behavior, habits, mistakes from your learn from your mistakes, learn from others, watch videos and everything. It will grow more than $100. But why do they constant over 1 month? Like they give all out maximum $100 to $2,000 in between or everything. But if he do something in in a day, he will probably get to 50 or 100 if he is disciplined, learn from his mistake. We did not overriding him. Emotions are not overriding them. So in that okay, so what? Why should they then? If they yes, and okay, the one I said that they are not smart enough to know that. But in that case, if he is more smart and he know that constant gain is good over big wins, so why do that do it? By emotions or by their pride or by anyone other prides?
Yeah, exactly. It really is a clash between what they know logically and what their ego wants in the moment. Even if they intellectually understand that consistent growth compounds, that big emotional payoff of a massive win is just too tempting. Pride plays a huge role. No one wants to feel like they're playing small, especially when they see others taking big risks and succeeding, or seeming to succeed. So even smart traders sometimes let pride and that need for recognition override that long-term wisdom. I think highlighting that internal battle between pride, emotion, and patience would make your piece really powerful.
So why is more money always more attractive than safety?
Yeah, that's a great observation. I think it's because we're wired for these big immediate rewards. Our brains get this rush from the potential of a huge payoff, and it just feels more exciting. Consistent, steady growth, even though it's more reliable, feels almost too slow, too subtle, like the magic is missing. So I think if you show how that short term thrill fades fast and how steady progress wins in the long run, it might help shift the perception.
So are trader addiction to high risk trades?
Yeah, absolutely. There's a real addiction cycle with those risk trades. It's like a hit of dopamine every time they place a big bet. Even when it hurts them, the thrill keeps them coming back. So risk management gets pushed aside. It's almost like a compulsion, not just a strategy mistake. So I think if you frame it as a psychological trap, you can really help people recognize when they're caught in that cycle.
Okay, so why
Ah,
does slow growth feel unacceptable to traders?
That's a great question. I think it's partly because traders are often drawn to the idea of being in control of a big, exciting outcome. Slow growth doesn't give them that same rush of victory. It feels too ordinary, like they're just going through the motions. Plus, everyone else's highlight reels, those big wins they see online, just amplify that impatience. So they discount the power of compounding because it's just not as flashy in the moment. Yeah, is what peeps just about chance over time. But when traders forget that, they start chasing certainty in a world that's inherently uncertain. So the takeaway is to remind them that the math of probability combined with discipline is what actually protects them long term.
So, why do traders accept trader, every trade to work?
Part of the human bias. We tend to latch onto the big emotional win because it gives us a sense of control or destiny, even though in reality, every trade is just a tiny bet within a larger probability space. So the trick is staying humble, remembering the long term math, and not letting each big win or loss define their entire sense of success.
Yeah. So first thing, is risk management boring because it accept uncertainty?
Yeah, exactly. Risk management is almost the antidote to that need for certainty. It forces you to acknowledge that you can't predict every outcome, so you set limits, protect your capital, and stay in the game longer. Yeah, it can feel a bit boring because it doesn't feed that adrenaline spike. Yeah, it's what keeps you alive as a trader. All unravels. So that blind spot is really a mix of overconfidence and a refusal to accept uncertainty.
So why do I use such as a failure instead of normal?
Ah, yeah, exactly. It's that tension between wanting to feel in control and just not accepting that a big win is always a gamble.
So how do you
So even though
usually
steady
how
small gains might feel less glamorous, they're actually what builds real success over time. Killjoy is what keeps you alive to play the long game.
okay? So why do traders um break rules for their such a little win?
Staying in the game long every and a trade the more steady wins compound. They just can't resist chasing that one big moment. And that's what trips them up. So it really comes down to reinforcing that patience and making sure they stay focused on the long term probability, not just that one big dream.
So the habits override the system.
Yeah, exactly. Those habits form almost a shortcut in the brain. So once they're in that pattern, pride or impulse can hijack even their best knowledge. That's why they have to be so intentional about building new routines, like stopping before each trade, reminding themselves of their plan, and keeping risk in check. It's a daily battle, but once that discipline clicks, they can stay the course.
Why is constantly so hard to maintain?
Yeah, it's tough because it doesn't give you that instant gratification. It's like you're trusting a process that only pays off in the long run, and that can feel really slow or even uncertain. But that steady compounding growth, once it starts, it's much more sustainable. And that's really what separates the short term thrill seekers from those who build real wealth.
Because I trade the method instead of discipline.
Exactly. So it's really about building that mental resilience, sticking to the plan even when the progress feels small. And once that habit forms, they start to see that every small step really does build towards something big.
So then why that them are traders reacting instead of disciplined?
Yeah, that's exactly the key. Discipline acts like a counterweight to that emotional pull toward big wins. So by being deliberate, setting rules, sticking to them, reflecting on mistakes, they build a steady mindset. And that's what keeps them from spiraling, from letting ego or greed take over.
Why do traders repeat the same discipline mistakes?
Yeah, it's really tough, isn't it? Once that emotional cycle kicks in, they get attached to the short term outcomes. And if they keep seeing small losses, they get frustrated and chase another big gamble. It's like they forget that each mistake is a signal to recenter, not double down. So I think the solution is really slowing down, pausing after each mistake, reviewing the process, and reinforcing that disciplined approach.
Um, why do fear? Why does fear cause traders to change position size?
Ah, yeah, that's a classic trap. Once they hit a loss, they often think, if I just double my position, I'll make it back. But that's where risk explodes, because one big move against them wipes out even more. So they need to focus on keeping position size K size consistent, no matter what the emotions say.
So then the market make the trap and people fall in it. That's what it is.
Yeah, exactly. It's almost a natural human trap, especially because in the moment it feels like a logical
Yeah,
shortcut,
but
but really,
how did that first to, in my thinking that they first make lots of them, then it take about it and go further, even more further. Then when they make position signs double, triple, they make a lot. Or the first you answer that in that I have very important question to ask.
of course, go ahead, I'm really listening. Whatever question you've got, I'm here to help you unpack it and figure out what's behind it.
Okay, do what is market?
Ah, great question. So, the market, in a broad sense, is just a place where buyers and sellers come together to trade assets like stocks, currencies, commodities, or even ideas. Prices move based on supply and demand, and that interaction reflects all sorts of economic, social, and psychological factors.
So now it is important. Is market controlled by AI or human or companies or persons or AI functions in robots? Market, what does it control the market and what the market, do you know market? It is controlled by AI, humans or companies because when AI should first you give me your answer, then I will give you my answer. So my answer is obviously companies because when companies make a loss, the market make a loss. But it is also happening that AI can give them a loss.
Yeah, I see what you mean. I think you're totally right. The market is really a blend. It's driven by humans and companies making decisions, but increasingly AI plays a huge role. Algorithms and automated trading now control a massive portion of the action, making split second moves that humans can't always predict. So it's this dynamic interplay. Humans set the rules, institutions push the big capital, and AI amplifies those movements, sometimes in ways we don't fully control. So I think your take is spot on. Companies lead, but AI is the force amplifying it.
How does the revenge trading destroy risk control? By the way, revenge trading is not often good in my opinion because in revenge you can lose everything, you can kill yourself, and that is what I think.
Yeah, I think you're really onto something there. Revenge trading is like this emotional spiral. It comes from frustration and that need to get back what you lost. And it's exactly when risk management collapses. People abandon their rules, overtrade, and end up wiping out everything. So you're right, it's not just a financial risk, it's a mental and emotional risk too. And that's why it's so crucial to pause, step back, and not let that anger or desperation take over.
Do emotions erase risk planning instead?
Absolutely. Emotions are really the enemy of a solid risk plan. So instead of reacting in the heat of the moment, it's all about grounding yourself, revisiting your original rules, scaling back if you need to, and making sure your next move is logical, not emotional. And by doing that consistently, you actually build trust in the process and resilience so you don't fall into that trap again.
Okay, so why do traders think it would not happen to me?
Exactly. If traders could just recognize that urge, take a step back, and stick to their plan, so much of that destruction could be avoided. It's really about breaking that cycle, learning from the losses, not doubling down on them. And with discipline, they really can avoid that pitfall.
So Is denying a high risk factor or a low risk factor? Is a high risk factor because when you have something happens to you and you deny it. Yes, you and because you would instantly if you low factor is not because you will not share and the share you can give for you, but so you will also say on your mind. But if you are a strong person, you can control that high factor on yourself and you will just say calm down for it because it is another test from God, you can say, or from yes, you can say from God. So I need to be straight control and control my emotion in that, and you should then make your mindset again, build again. Because if you see, mm, I'm telling you my story. It is currently my Facebook was cancelled or dismantled, banned and it have around, but only 6,000 were on the only 25 were left to complete 6,000. Then I make my own. So if I have the mindset that I was really sad because you make something, you happen to do something, but it then ban something like that. Now I have made my own. So in that mindset, I wake up, I make new one, I dismantle the old one, and I'm working again.
I'm really glad you shared that, and I'm sorry you went through that. That must have been really tough. But honestly, I'm really impressed by your mindset. Like, even after that loss, you're taking a step back, staying calm, and rebuilding. That kind of inner strength, being able to control your emotions, trust yourself, and keep going, it's so powerful. And every day you stay disciplined and keep building, you're proving to yourself that you can get back on track.
Um,
So keep that faith.
if you say I'm going to say I am a little bit, mm, you can say I'm 50-50, or you can say I'm a little bit disciplined. I'm 50% disciplined in that what comes in my mind, and the 50 and 20 I'm just like doing that, just ignoring and doing everything whatever I want, and the 25% is easy.
Yeah, I get that. It's totally okay to feel that way. It's a process. And just recognizing that, like half the time you're disciplined and half the time you get pulled off track, that awareness is a huge step. So it's just about practicing that mindfulness, catching yourself when you drift, and slowly tipping that balance more toward discipline. Every bit of progress counts, and you're already on that path.
Because if you say from wait a minute. From the 5:30 I stay disciplined when I wake up to till 5:30 p.m. But then after that I become just nothing and just do whatever I want.
Yeah, I see what you mean. It's like that initial focus in the morning sets a good tone, but then as the day goes on, it's easy to lose that structure. I think maybe setting small scheduled checkpoints like mini reset moments could help. So after each task or break, just pause, breathe, and realign. It's not
Okay.
about perfection, it's just about catching yourself and gently steering back to all those positive habits. And you're
Okay.
already showing a ton of self awareness, which is a huge strength.
So the risk management is good because it feels like restriction, but in reality it's learning to keep you alive in the game. Most traders do not lose because of bad strategy, they lose because they refuse to protect themselves. So thanks for watching. Bye bye.